Hey everyone, welcome back to Vancouver Real Estate Podcast. Today we've got a fantastic episode with Andrew Liss. He is the chief economist of Greater Vancouver Realtors. Andrew joins us to talk about the state of the market, and his take is interesting. It's not what you're hearing out there all the time, the common narrative that it has to do more with Donald Trump and uncertainty. He's got a much more nuanced understanding of the market, and I think you're going to have a lot of great takeaways from today's episode.
Absolutely, Adam. He shocked the real estate industry with the idea of the new normal in February's stats. He unpacks that today. What exactly does he mean? Why does he think the new normal is the most important headline he's going to write all year? And how long does it last? So stay tuned for that.
Yeah, and if you like the content and you're finding value, please do subscribe to our channel and share this with someone that you think might benefit from the content. Okay, so we're here with Andrew Liss. He's the chief economist of the Greater Vancouver Realtors. How you doing, Andrew?
I'm doing really great. Thanks for having me back on the show.
And I know it's been a while since the rebrand, but let's remind some of the agents out there, also formerly Real Estate Board of Greater Vancouver, because I feel like a lot of people might not know about that rebrand, although it's been probably almost 2 years now, I think.
Yeah, it's been a couple of years. It was a funny one. Like there was definitely I could see the appeal of doing it. Like the REBGV brand was very old. It's about 100-year-old organization and so on. And there were aspects to it that I think were maybe time to retire. I have a bit of a soft spot for like old things though. So like, part of me is sad to see the old name go, but the GVR brand is the new one. And it's kind of nice because it's a refresh, gives us a chance to sort of reimagine, what our organization looks like and the kind of services that we provide to members. So it's a bit of, bittersweet sort of thing for me, but GVR is the new name. And yeah, it's been an interesting journey so far.
Right on. Well, Andrew, you've been on the show a bunch. Should say past guest fan favorite for sure. Maybe we'll just jump right into it here. Will we have a spring market?
Oh, that's bad. Like, what a great question to lead off with. Yeah. So, okay. So far. Okay. So we put out our forecast for 2026 back in January. So that model, I did some tweaks to the model this year because last year we didn't get it very right on the forecast. What happened? I mean, you guys are, I'm sure, aware that the spring market didn't happen, right? Sales were way below where they should have been in, April, March, that kind of time frame. And it was a bit of a hard one to explain. I spilled a lot of ink last year trying to explain various reasons why this might be occurring on the, economics blog or whatever that we publish and other places. And it was a hard one to figure out. So what was going on with our modeling at the time in 2025, I should say, was that I run this whole battery of models. I got all these models that compete with each other as hundreds, maybe sometimes thousands. It depends on the setup or whatever. And they all fight with each other for modeling supremacy. So then once I whittle them down to a set of 10 or so who do a really good job of forecasting over the recent past, I put those together as a kind of ensemble model and use that to predict, what might happen in the coming year. And at the time, in 2024, late 2024, we had some momentum in the market because rates had come down quite a bit in the year prior, and there was expectations that rates were going to continue coming down, and we did get those things. But 2025 didn't come out with as much of a bang as the model kind of suggested. And so what ended up happening this year is I revisited it and I said, there's something funny about the way the model's picking up on what I call momentum. So this structural model that I run has it kind of has an understanding of relationships between all of the different things that we might look at in the market: sales to active listings ratios, average prices, listings, sales, everything. It kind of has this understanding of how those things glue together. That's the structural model. But that thing, what it kind of wants to do a lot of the time is predict paths for the future that are close to long-term averages. Because from a kind of, statistical or betting strategy standpoint, that's the most likely path that something's going to take. And on average, that's the one that's going to yield the lowest error rate in a modeling framework that says, hey, this is the model that beats other models most times, because if you kind of bet towards the average, you're going to do pretty well over longer terms. Now, of course, that means that some years you miss pretty bad, and 2025 was one of those years where it bet the average, but the average didn't happen. And so looking at 2026, I said, I got to see if I can kind of modify that a little bit to pick up on momentum a little bit better. And by momentum, I mean, basically, if you look at something like sales, it's pretty rare to see, like, say, a month, let's just use a fictional month or something. Let's say January, and let's say sales came in at 1,000. It's pretty rare for a model or for like reality to come in where February would come in at 10,000 sales or something like that, right? Like, that's a massive jump. That's just huge, huge, huge. And so, like, in a structural model, it might predict something like that, because it might say, well, based on all these relationships between all of these things in the world that I understand, that's the most likely outcome. But from a momentum standpoint, anybody on the ground looking at it is saying, like, hey, we're running at 1,000 sales. It's super unlikely that we are going to hit 10,000 next month. It's just like, that's a vertical climb that's totally unrealistic, right? So what I did this year is I used these other kinds of models that don't know anything about the world. They're stupid. They're really dumb models, but like, they're useful for certain purposes. What they do is they just predict the next data point based on what the last couple data points were. It's like a moving average of sorts. But it has a little bit more fancy math behind it. And what I did was I integrated these two worlds of modeling. So I took this momentum model, and what it does is help me predict the next few months at the beginning of the year to make sure that the momentum trajectory is a little bit more correct, or at least realistic, let's say, if not correct. And then as we move towards like spring, summer, the weights in the modeling shift towards this more structural model, which envisions a world based on these relationships it understands. The result of that this year is a model that looks, with like a forecast that looks a heck of a lot like 2025's sales did. So not a particularly strong year, which is kind of interesting. But so far, we are actually beating where the model's at by a little bit. Not by much, but like by a little, So interestingly, the market is there's a little bit more activity at a macro scale than the modeling was predicting. So this is kind of an interesting finding that I'm keeping a pretty close eye on. And where, the rubber's really going to meet the road is by spring. If the market is really like responding and actually moving, in a way that the model thinks it's going to be, it'll align pretty closely with what 2025's numbers kind of look like, which I know wasn't a super, super strong year, but and if it beats that, well, then it means, the market will be running significantly above expectations from the structural standpoint. So that'll be a kind of interesting finding as well.
So, Andrew, when I saw the January stats, I immediately dropped to the floor in the fetal position. What happened in January? Like, why was January such a off month? Like, it feels like it's off even in the context of the last 2 years.
Yeah, and this is the thing that I'm still trying to work through, right? Like, it's like I said, I spilled a lot of ink on this last year trying to determine what the heck could be keeping, the buyers basically on the sideline. Because last year, sellers came to market in huge numbers. It was a record year for listings. So, like that tells you something, that there was no shortage of action on the sell side, but it was all just missing buyers. And so, again, coming back to that momentum thing, I think that's part of it. Is like, momentum is a hard thing to capture from like a reasons why standpoint. It's just like a thing that is, you know what I mean? It's like water flowing. It's like, why does the river go at that rate? It's like, well, because that's just the mass of water and everything moving. That was very hard to change the flow of a river, really quickly. So I think that's part of the explanation of why January is so slow. The market, just people, psychology, the market environment and everything is one in which, there's no urgency, it seems like, on the side of buyers. And on the side of sellers, interestingly, this year, it's not as strong on the listing side, not down by much so far, but about like 7% or something, 6-7% below last year's listing rate. So a little bit slower on that front. So why, though, is January so slow? Like, again, hard to pin down. We certainly have all this global uncertainty ongoing. That's one of those aspects that's sort of nebulous and also hard to quantify. I did try to quantify this a bunch last year in various pieces, looked at it. So there's this index out there called the uncertainty index, eh? Right. What this thing does is it basically picks up on words like uncertainty and various macro data, things like this, and it tries to quantify this and give you some kind of time series trend of what uncertainty looks like in any given country or whatever. So for Canada, there was obviously this huge spike when Trump was inaugurated, largely resulting from all these tariff-related policies and things, which introduced a tremendous amount of policy uncertainty here. So we saw this big spike in this metric, and it did coincide with sales slowing down quite a lot at that point in time. We continued to see sales sort of sluggish, but the weird part to me about that is that if you run a correlation of that uncertainty index versus sales over a longer history, there's a very low correlation between those two things. So now that the uncertainty metric is coming down and it's dropped by like 50%, 60%, right? If there was a strong relationship between these things, you would expect that as the metric comes down, sales should be picking up, but they're not. So it's kind of like it gets to the point of being like, well, is it really uncertainty that's like keeping everybody on the sideline? Because I did a presentation recently in January. Not sure if you guys managed to catch it, but in it I talked about some other factors going on in the market that I think may have a bit more teeth in terms of explaining the slowdown we're seeing. And one of those factors was the major slowdown in immigration and the outflows of population, essentially. So the first time in quite some time, possibly ever, in some of this data, we're actually seeing net outflows of population from British Columbia and a number of other provinces as well in Canada as a result of federal immigration policies. And I feel like that actually is having a bit more of a real impact on the market in ways that I to be honest, I hadn't fully anticipated to that extent in earlier work on it, because the main outflows are coming from non-permanent residents, and non-permanent residents don't tend to buy houses, right? They're here by nature temporarily. So my initial investigations of that issue was that, well, this is most likely to impact the rental market. And that's exactly what we're seeing right now. I don't know if you guys have been keeping tabs, but Vancouver's purpose-built vacancy rate just went up to almost 4%. And it's never crossed 3 since 1990. And I mean, it's crazy because like I said in this presentation, like that you think about how much policy and how much, time and money and everything was spent on trying to get that vacancy rate above 3% on all levels of government, federal, municipal, whatever. Everybody for years, for over 30 years, has been trying to get the purpose-built vacancy rate above 3%. And you know what did it? Putting the brakes on temporary residents, essentially, because they're renting. Now, where that has the relevance to the resale market and so on, which I think I underweighted in previous investigations of that topic, was that if you look at the structure of the rental market in British Columbia or in many places in Canada, what you find is about a third, at least in BC, is made up with the purpose-built rental market. So institutional investor kind of thing, large, investor-grade buildings. The other 2/3 made up by mom and pop investors or individuals who own a condo or a basement suite, that kind of thing. And it's a bit of a dark market. Like we don't have super great data on that. Like we do know a little bit about that from CMHC's condo survey, but the rest of it is kind of, it's like a hole we can't really see into. So I think where the relationship is there is that with this major population outflow, with vacancy rate rising, with rents not really rising, in fact, falling in a number of places, I think the investment proposition, if you will, is weak at the moment. And that has kept a lot of investors out of the market. And you layer that on with all of the policy interventions that we have kind of trying to negate investment in the market, speculation vacancy tax, all of this kind of stuff. You get a world where investment is not welcome. And I think this is the sort of culmination of all of that at this point, where I think if you're to look at why sales are slower, I think a big part of it is really the investment side of it. And it's just very hard to get good data on this. We can sort of triangulate answers to things in the way that I just sort of explained, but there's no like one data set that just says, hey, here's how many investors there are in the market today and how many, there were yesterday sort of thing, like on a very consistent basis and specific to certain market segments and stuff. So I think like long-winded answer, I think that's really like where some of the rubber's really starting to hit the road. It has a lot more to do, I think, with this slowdown in population growth than it does with the uncertainty.
Interesting.
That is interesting because I feel like you were on, I'm not sure of exactly the date, but last February, last March, and you were questioning the uncertainty narrative even back then. in kind of where everybody else was zigging, you were zagging type thing. So it's interesting that's still very much an ongoing question. It strikes me that all of what you're describing, though, speaks to that momentum question that you're trying to apply to those models, right? Like the lack of the vacancy rate increasing, it's like layer upon layer of lack of urgency that has kind of created what you called, I think, a new normal in the last set of stats. Can you talk a little bit more about what the new normal is, what it means, and how long is this the new normal?
Yeah, absolutely. And it's always fun coming on this podcast because you just gave me a good idea. I always get good ideas from you guys with the questions and stuff you have. But I was just thinking about it. It's like, one of the things that we don't have is really great data on investment in the market. And if I did have that, and if I could plug it into the model structure that I have, particularly the structural models that understand relationships between things, I think what we might find if I had this magical, mythical data set is that the level of sales that we observe right now is the level of sales that would be consistent with kind of end user demand and regular churn in the market from life events and things like that. I think that's what you would find. And then the missing hole of where the lack of sales is coming from would probably be largely attributable to that investment
investors
segment.
Yeah.
If I were able to model this out and have the historical data to do this, I think that's probably what you'd find. And this is a guess on my part because I don't have this information, at least. Now I'm going to go looking for it pretty deeply after this podcast. But anyways, back to your other question around the new normal. This is kind of a segue into it, is that, well, if we're in a world where, investment is kind of not welcome per policy in the province, and if federal immigration policy doesn't change, and if we continue having these net outflows of non-permanent residents, I don't see the thesis for investment changing much over the near term. So that would imply that really the level of sales that we would have going forward would be like I just described, the one that's consistent with end user demand in the market and those like regular life events that people have. If you're young and you're getting into your first home, maybe buy a condo, or you shack up with somebody, you have a kid, and next thing you know, you need the townhouse, and then maybe your family grows a bit bigger and you need the detached, and maybe you're at a stage where the kids are out of the house and you're downsizing or something, right? So those are kind of some of the key big ones. I mean, there's divorces and other things that happen, of course, in people's lives and things like that spur on sales and whatnot. But I think that's kind of where we see probably a lot of the activity. Now, you guys are on the ground though, so you could probably inform that conversation a bit more as well around, like, have you noticed a significant drop in the investment pool? I don't know how many investors you guys typically work with, but it'd be interesting to hear your perspective on that as well.
It used to be about 50% of our business, I would say, and now it's I would say non-existent.
Well, there you go.
3% maybe.
Yeah. So so this is making me think about two things. One is last year around this time we had the tariffs come in. So the uncertainty narrative was that, I mean, I guess there's an argument made with based on the uncertainty narrative that this year for February and March would have to be stronger than last year because the market almost shut down with the tariffs, or felt like it did last year at least, right? And I don't know that there was much. Do you think the sentiment has changed much for investors from last year to this year?
I don't. I don't think so.
Yeah.
And the other thing, like, the numbers haven't changed, right? Like, if you look, like, interest rates are still roughly where they are, sales are still kind of where they are, that, like, the rents aren't rising, vacancy is rising. So, like, from a, investment pro forma standpoint, numbers haven't changed, investment thesis hasn't changed. So I don't know why the market would change too much on that front,
And February was down. February year over year, this February was down slightly, if I remember from the stats, I think in terms of sales activity.
Yeah, I think it was 10%.
Yeah, right. Yeah, exactly. So I'm just trying to think here, though. So really, we're still down because I think a lot of people were kind of forecasting that we'd have a busier February and March this year because of the lack of the newness of Trump and tariffs. But I guess now we have a war in the Middle East, so it's kind of like trying to gauge the uncertainty argument. You're basically making the case that that's not really what we should be necessarily watching.
as I said, like I've looked at it from a statistical standpoint, and historically, over like a longer term, there's very, very little correlation between this so-called uncertainty index and sales in the market. Now, it could be that the uncertainty index is garbage and it's a terrible metric, and maybe that's not the right one to be looking at. But there are no other ones that I know of that kind of try to capture that zeitgeist of what's going on in the market at a given point in time. Very, very difficult thing to quantify, right? So, but I think what that tells you that, and like, so I don't know if you guys caught it either, but I have another plug for the blog here. I did a piece, I think in December, or maybe it was a little bit before that last year. And it was called like, what was it called again? Shoot, I don't know. It's escaping me. Anyways, it was like, what's a normal housing market? Or what's normal or something, right? Because I did this presentation with Brendan Ogmanson over at PAC West conference, and one of the audience members was like, had a good question at the end. It was like, oh, well, when do you think the market's going to get back to normal? And it's a good question, and it's a seemingly basic one. But as I started like peeling back the layers on this thing, I was like, well, like, how do you even define a normal market, right? So I start like peeling back the layers in this piece, and I'm like, okay, well, let's look at like sales first or something, and let's say like, let's define normal as when sales are not beyond these like statistical boundaries that would be defined as highly unusual or something, right? And then I do this with like prices and sales and a bunch of other things, and I managed to cobble in all these like policy events and things that happen. And at the end of this piece, it sucks because I'm giving away the whole punchline here. I was hoping people would go read it, but it's fascinating because you put this whole story together, right? You walk through all these different elements that like impact the market at some given point in time, and the end chart that I present at the very end is this chart that is just covered in all kinds of tattoos of things that say like, this was an abnormal period. Like, basically, there's very few periods in time over the history of Vancouver's market where we haven't had some kind of event that's impacting the market in some kind of, psychological way, or some kind of policy way, or some kind of, whatever. Like, it's just like constant. So there really isn't some kind of normal that we can talk about it in that sort of statistical sense. And I think what a lot of people refer to, or what kind of mean in the colloquial version of normal, is like, when are we going to get to a market where there's a lot of sales, and when it looked like the boom years. But like, looking back on it, one of the things that's kind of been bugging me lately is like, we use this rolling 10-year average, seasonal average in a lot of our stats. And like, it's a good stat because it gives you this like longer term, history and perspective. But one of the problems with it right now is you got 2016, 2021, and 2022 in there, which, if you'll recall, are big years for sales in the market, like really big years. And with those in a rolling average, an average is going to skew up because of such high sales. So, for the past 3-4 years, with the market being kind of sluggish, if you will, we've been running well below that 10-year average. And like, part of the reason is because you got 2016, 2020, 2022 in there, right? If you didn't have those in there and those years weren't so big, we actually wouldn't really be running that far below averages. So it's really one of those funny things where it's like, numerically, when we look at it, it's like, yeah, statistically, I see that we are below the average. But like I said, there's still this level of like, I would say, fairly healthy sales from that like end user demand in the market that's still there. It's not like the market's like completely cratered. It's not like there's no sales. It's just we're really missing that investment component that I think we used to have. And I think along with that, we also used to tend to get a lot more people jumping into the market when you had like prices rising a little bit faster, because there was like an investment sort of aspect to it where people were like, oh, I've got some excess equity, why wouldn't I buy this condo and see what happens, roll the dice a little bit. But now, with population slowdown, vacancy rates increase, and rents not rising and stuff, I think a lot of people are just less interested in doing that kind of thing. Then you layer on all the taxes that people are facing right now, right? Like, they introduced the flipping tax, which granted isn't like a crazy amount of tax, but it's like, it all adds up, right? You do the math on just buying and selling a property, all the fees that are involved. And no offense, guys, I know you guys are in the business of collecting fees and stuff, but it's like, it adds up. It adds up, right? And it's funny to me because you still kind of, in social media, you see these people that are like, yeah, there's all these people flipping real estate, blah, blah, blah. It's like, do the math, right? Do the math on what that looks like. It's super unlikely that there's people like trading properties daily or weekly because like the market's up 10, 15%. Do the math, like the transaction costs, once you pay property transfer tax, everything, the lawyer's fees, and there's all the due diligence and all this, you're not making any money. You're losing money if the market's not going up enough. So that whole side of it's kind of nonsense. And like, I think there just isn't really that much of that happening anymore because, you don't have a market that's just ripping higher like it used to. And, the reasons for that were different back then. We had no supply. There was no inventory back then, right? 2016, around there, nothing for sale,
Do
So
you think? Go ahead, Matt.
no, you go ahead.
Well, no, I was just thinking because I mean, I'm thinking of all the things that would be potentially useful to know if you could actually track them, and one of them is pent up demand. I mean, I've the other argument that you're hearing in this market is that one, a lot of banks have suggested that pre-approvals are on the rise and that a lot of people are getting rate holds and that sort of thing in place. A few banks have been kind of bullish on this year. I'm guessing that's one of the ways they're kind of monitoring what the market might do. Our brokerage has just started monitoring open house activity, which I think is actually a really like polling it. I mean, it's very much kind of agent.
Yeah, kind of anecdotal almost.
Yeah, and the ability of an agent to actually record the data. But again,
Yeah.
another useful metric. Is there a way that you can monitor like pent up, like sideline activity or pent up demand? Like, and I mean, I mean, the most useful one I can think of is like I mentioned, like something like a pre-approval, the number of pre-approvals or something along those lines. But probably hard data to access.
Yeah, I mean, that would all be very interesting data to work with. I mean, some of it I'm sure would be kind of lumpy and wouldn't have the kind of regularity that would be necessary for some kind of modeling exercise, but at least looking at it just objectively and analyzing it with using a human brain of sorts, and like that would be an interesting way of just sort of assessing the situation. But to the question around pent up demand, I mean, like from an economist toolkit standpoint, the way that like this would traditionally be looked at as a way of measuring this, and I've done this exercise, I'm just not like a huge fan of it, is you build a model of reality, of what reality ought to be like based on various factors that you can monitor, right? So things like interest rates, things like GDP, things like how many sales there are in the market, how much inventory there is, blah blah blah. You build this model of reality. You put all the variables in there that you think are relevant, and you got to do all this econometric testing and stuff like that as well to make sure that you don't have like some totally bungled model that's just giving you total garbage output. So it's like a fairly technical exercise. And what this does is it will give you some output of what the model thinks reality ought to be. So let's say if we're looking at sales, it'll say, well, based on all these factors that I have in the model, sales should have been, let's say, 2,000 in January or something. And then the fact that sales come in at 1,000, hypothetically or whatever, means there's 1,000 sales that didn't happen that the model said should have happened. Okay. So you take that concept and then you sort of cumulatively add this up over time, right? And you'll have points in time where the market will be responding in a way above what the model thinks, demand should be. And so that will actually reduce pent up demand. And if you get this cumulative sum over time that kind of rolls through time, you'll have some notion of how much pent up demand there is in the market based on usually a deficit between what the model thinks should happen and what actually happened. The question around it's my sort of reticence to rely on that has a lot to do with like the model not being very good at predicting reality in the first place, right? I don't actually use a structural model like that for forecasting sales because it tends to do a way worse job of doing that than a much simpler model that has these momentum factors and things built in from a purely like from predicting the next set of data points kind of standpoint. Like if you're measuring accuracy that way, yeah, like those structural models that try to internalize all these complex factors about the world don't tend to do as good of a job. And I mean, statistically speaking, it's because you're introducing a huge amount of competing sort of indicators into it. And what it ends up doing is giving you this very muted, washy signal of what the world looks like, because there's just too much going on. The
Mhm.
signal that you really need is being buried in too much information. And so it's kind of a weird exercise. So I don't tend to rely on that much, but for the pardon the French here, but like for shits and giggles, I've run this model, like
Yeah.
a number
Yeah.
of times. I keep a kind of eye on it from the side of my desk here and there. Like I sort of spin it up every once in a while. I'm like, well, what does this thing say? And like right now, it says there is a pretty good amount of pent up demand. A couple thousand. It's suggesting there's like a few thousand sales that should occur that have not occurred, which isn't like some tremendous amount. But I mean, when you think about it, it's like, well, if all of that were to come into the market at one point in time, that would be a very tremendous amount. But like then you've spent the pent up demand, and then you're
Yeah.
back to what the model sort of thinks. So it's hard to quantify. Like that's the Economist toolkit for looking at something like that. And there are some other ways that it can be done, but they get a little bit more complex and like a bit more beyond, probably beyond the scope of this one podcast to explain. Probably you need 2 or 3 podcasts to try to explain the way you might do that with more advanced methods. But yeah, that's kind of where it's at right now.
Andrew, I'm just wanting to go back to this idea of the new normal and kind of regular churn in the market, which is for listeners not thinking about how Vancouver has been, but thinking about a regular, a Winnipeg, a Saskatoon. It's like that's just a regular real estate market, right? But I'm curious what your thoughts are if there's a prolonged period of this new normal for God knows how long, what it does to pricing. Like, do we just
Yeah.
continue? Like, pricing has been sliding.
Mm-hmm.
Where are we at there? If it's just regular churn, do prices continue to slide?
They could. When you do a comparison between us and somewhere like Toronto or something, we're not down nearly as much. Toronto's down 10% or something. If we look at a composite index or something like that, right? So Toronto might be down something like 10, 11%. We're down 4 or 5%, half of that. But we have similar dynamics happening. Toronto has a big supply, a lot of inventory on the market. They particularly also have a huge amount of what you might call shadow inventory of like developer held product that has not sold, like newly completed units, I should say.
Right.
Here in Vancouver, we also have a lot of newly completed units that have not sold sitting on developers' hands. Our inventory is up. You would expect pretty similar dynamics, but for whatever reason, Vancouver's held pricing a little bit firmer. And I can't really. It's hard to say exactly why that might be. Like these markets are highly similar in many ways. It could be that maybe the threat of tariffs and stuff would have had a bit more of a damaging impact to Ontario than it would have here. So that's maybe where some of the actual bits of the uncertainty kind of come into play there, because there was this interesting analysis somebody did at I apologies to the authors of this because I can't remember the place where they were there, what institution it was in Canada. But it was an institution that looks at trade across borders, but also interprovincially. And when this tariff stuff came out, their chief economist and their team did this kind of interesting analysis where they analyzed all of these places in Canada and created an index score of how much these places might be impacted by tariffs. And what you find is place like Vancouver actually scored very low on this index, meaning there was very little risk to Vancouver, as opposed to somewhere like Ontario, which has steel is a bigger issue there because of the automotive sector and a bunch of other things like that. So
Right.
It could have to do with composition of the economy and things like that. But again, I'm a little skeptical of the whole uncertainty thing, because in many ways the impact of the tariffs actually never really fully came to pass in the way that the fear was set out around them, right? Because of Kuzma and various other agreements that were already in place, the net effective rate of tariffs wasn't that high. But getting into the question of that new normal and is this something that's just going to continue on? It's well, as I was talking about earlier, this population dynamic is one of the ones that I'm watching pretty closely as a kind of signal in this noise, if you will, because if you look at historically, we've pretty much always had people net inflowing into British Columbia in big numbers. There's not small amounts of population growth. We would grow every decade or so. The population of British Columbia would add about 3 million, or sorry, the population of Canada, I think it was, add about 3 million people or something like that. In the last decade, in the last 5 years, the population of Canada added almost 3.5 million people or something. So in half the time that we normally take to add 3 million people to the population of Canada, the last decade here from the 2020s on, we've added about 3 million people in half that time. That is like turbocharged population growth. You know what I mean? And so the government was like, whoa, 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 this is way faster than we had anticipated. So this is where the policy implications come from of trying to curb that immigration flow, because they are running way faster than historical norms of people coming into the country. And a lot of those people obviously flow to the big provinces, Ontario and BC, and of course into the major job markets there and stuff. And the other interesting thing about that, I talked about in this presentation, which people can check out, by the way, if you go to the GVR Economic site and you want to see like a whole like presentation of me talking about a lot of these topics with like charts and stuff. Yeah, it's right up on the blog. I think it's like the blog post there. It's a presentation we did for members, but after we do it for members, I like to release it publicly usually and just allow people to look through it. But one of the cool things in there that I was looking at, I was like, well, you got this population flow that's really slowed down tremendously. And when you look historically, that has been for sure a key driver of what has been, a major tailwind to the market in not just Vancouver, but like across Canada to so many places. It's these inflows of people that have been one of the key drivers of housing demand. And why is that? Well, a lot of people that immigrate to Canada, we like as part of immigration policy, we tend in Canada anyways to import people who are of working age, who contribute to the economy in those key, working years of life. And it's not entirely coincidental that those working years of people, those working ages between roughly 18 and 45, where you're really kind of like in the thick of work. Of course, people do work beyond 45, of course, but that age group also tends to be the age group that buys houses. 20s to 40s. These are like the peak home buying years for many people. As you're, 18, 19, you're looking at maybe getting your first foot in the housing ladder. 25, 30, you're maybe looking for that townhouse, the move up. 35, 40, if you're lucky in a place like Vancouver, maybe you get into a detached or something. So there's this natural progression of like housing demand there. And when you have a fire hose of people coming into the country, who are all of that age, that's how you get significant housing demand. And, the story for many years, obviously, has been we haven't been building enough housing to accommodate that demand, right? And that's how you get price escalation. Now, the dynamics completely changed. That population flow is negative right now in BC as a result largely of non-permanent residents, not so much on the permanent resident side, but policy kind of unwinds, and at some point I'm sure they'll recalibrate it and change it, but I don't know that we'll be going back to the fire hose level of people coming, right? I really don't think, I think the government is well aware now of the impacts of that kind of policy, and I think they're weighing the political calculus of that. There's been a generation that, feels very hard done by being priced out of the housing market and a lot of this, and it's from having to compete with new people coming to the country who are, buying homes and stuff. Absent that population flow, we never would have had the kind of price growth and things that we've experienced over the last 10, 15 years.
So prices down by the end of 2026.
We'll see. It's one of these weird things where like Vancouver's, for whatever reason, has been more solid than Toronto. There still is this end user demand. Another part I got into in the presentation is like longer, and this is hard to explain without charts, but I'll do my best here. There's demographics going on under the hood of this whole thing. If you look at population age structure, so if you think about, if you take everybody in society and everybody has an age, we're all some age, and you line them up and you say, okay, how many people are in each age bucket? And you look at like this structure of society by how many people in the age buckets. And you can look at this at different points in times, right? You can go back to the 1980s, and what you'll find is in the 1980s, the big chunk of the population in the prime home buying year age buckets, 20 through 40, were squarely the baby boom generation. So at that point in time, a significant amount of housing demand was driven by the baby boom generation. As time passes, we fast forward, 15, 20 years, you get to the year 2000. What happens is the millennials as a generation form a pretty significant population cohort they are sitting at the age group right before they enter into prime home buying years. Their whole generation is just up at that 20 years of age line. They're kind of the oldest millennials are hanging out kind of at that 20-year age line, the year 2000. And I don't know how long you guys have been doing real estate or following real estate, but like, I know you guys have been in it for quite a while, but if you've been back around 2000, you might remember that things started to get kind of saucy in Canada's real estate market in and around the early 2000s, 2003, 2004, blah, blah, blah. Those years start going on. Well, immigration policy tied with a very big demographic that needed to get into the housing market that was sitting right at the cusp of those prime home buying years. Every year that went by from that point in time, those millennials were marching into the prime home buying years, year by year by year by year. And as a cohort, they form a significant portion of housing demand. And combined with the fact that we were importing many people of those specific age groups that buy homes, you had this very large cohort of people coming into the demographic structure of things that were driving housing demand for many, many years. Right now, the generation behind the millennials is actually smaller than them by quite a bit. And without immigration coming in, if we just march through time, you will see that housing demand naturally will decline as a result of fewer people simply being in those age brackets that need to buy housing. It's just like mechanical because it's population age structure. Like, I mean, there's nothing to it. This is like the most basic model of things that you can possibly imagine. It's basic addition and subtraction sort of here. And what I'm saying is that the generation behind millennials is smaller, and they're not going to be as, they're not going to need as much housing as the millennials did. They're going to need housing nonetheless, but it's just not as big of a generation. So from that standpoint alone, you have less of a wave of demand likely in the future. Now, the big variable, of course, immigration. If it turns back on, or if there's, it depends on how the flows of people flow from immigration. Even if we kept the same amount of people coming into the country, permanent immigrants to Canada, but if more of them flowed to Vancouver than Toronto, say, well, that could pick up demand, right? So it's like, this is one of those hard ones to quantify because it really depends on what's going on in our economy and whether we can attract people to our economy to contribute and have good jobs and want to buy homes and so on. So yeah, it is a bit of like, I know it sounds like a bit of a dismal picture. I don't want to make it sound like it's like some Armageddon scenario by any means. This is a very slow moving thing, and it's why people don't really talk about it too often, because it's just like it happens kind of under the surface things. You don't really notice it happening. And it's why I kind of revisited it in this presentation that I did recently, because the last time I looked at it was years ago, because these things move so slowly, right? And it was like, what am I going to do? Talk about this every year? Everybody aged by a year. Of course, everybody knows that. You know what I mean? It's like, duh. But it gets kind of interesting when you see these like shifts over 5-10 year periods where you suddenly see these larger dynamics that are unfolding beneath the surface that are very, most people don't pay attention. They pay attention to things like the uncertainty index because it's sexy, it's all over Twitter, and it's in your face all the time. But like me getting older every year and not needing as much housing is not in your face. It's not right on Twitter. But it is truly, that is one of the key drivers of Canada's housing market. Always has been, always will be.
Well, Matt and I have had this conversation. I don't know if we've ever had it on air, but presumably, like, the more I think about AI and automation and robotics, that suggests to me that immigration numbers are not going to be increasing, or at least there seems to be arguments that a lot of countries are going to, like I've heard the argument made that like countries like, say, like Japan or more xenophobic countries will benefit or be able to adjust to an AI future, I guess, more swiftly than other countries that have been more open to immigration. I don't know. Like, I feel like with, I don't know how that, if that's playing into your thoughts around immigration or the future of immigration.
I mean, honestly, the AI thing is just so, we're just at such a crazy point in time, in my view, of like trying to predict the future. And like, I think one of the things that I can say about this that I think that will probably hold true and age well on tape is that if you look back in history through like all of these pivotal points, more recent history with technological shifts. I'm thinking of something like the internet, right? There were people saying pre-internet, like pre-internet, the way that we know it today. There were people saying, like, famously saying, this thing's a fad. It's going to go away. It's just like, nobody's going to use the internet. And now you can't imagine your life without it, right? And I think the same thing is true of AI, but it's yet to be determined what that looks like. And in terms of impacts on jobs and that kind of thing, I'm not as much of a doomer on that these days as a lot of what you might see out there, or at least what I come across anyways, in a lot of popular social media, this kind of thing. There's a lot of doom and gloom out there about, it's taking all these jobs, it's going to eviscerate entire empires of this and that. I'm like, I don't know. Like, I kind of feel like there's a lot of opportunity that comes with a tool like this that opens up a tremendous world of possibility that we, yet with our sort of blinders of backward looking knowledge, we can't fathom what the future look like because we are too naive and blinded by the past to see what this possibility unfolding before us was going to look like. If any one of us on this call had the vision to see what that looked like, I don't know whether we'd be on this call. We'd be out there building that future, right? And I think that's the thing that I think is kind of a wild card here, where I could see a world potentially, if, the Canadian government is smart, of being one where we attract the kind of innovators and people who are building the AI future to our country to help us build the tools that are going to power everybody's life in the future. And I could see that being a tremendous driver of jobs. Conversely, I could also see a future where we sort of deny the existence of this tool as being, useful. It's a dangerous thing. It's going to obliterate economies, and, go with a very fearful mindset into the future. And that could be potentially damaging for the economy and so on. So it's really hard to say which way we're going to go at the moment. It really depends on the political flavor that we have going forward as well. But I'm cautiously optimistic of the AI future. Like, I do recognize its impact. It's impacted my life tremendously since it's hard for me to imagine functioning without it in a professional setting anyways. I mean, on a personal level, sure, I'll go read a book and hang out in a like a hammock or something all day. But in a professional setting, it's like, this is too bloody useful. You know what I mean? Like, if you know what you're doing with it and you have the ability to kind of adapt to this new tool and learn the new ways that it works. And I think one of the things that a lot of people, I've noticed this, and maybe you've noticed this, there's a lot of people who come to AI initially with really high expectations of what it can do. And then, of course, they're let down by that. Oh, it can't do this. It can't do that. But they haven't quite, kicked the tires on it long enough to fully understand that the limitations of where it's at. And if you stay in the scene for long enough, you see how quickly it grows and evolves. And a lot of those pain points that somebody said even a few years ago, I can't, it can't write a proper email. Well, it's like, now it writes perfectly good. It writes better emails than I ever wrote. It writes, better code than I ever wrote. That's one of the saddest parts for me. I got to admit, one of the things I
plays better music than you ever wrote.
That's one of the other things too, It's like, man, there used to be a joy in hand programming things. There really was. And the people who gravitated to that field, and there still is a joy in this, I should say. It's not entirely gone. It's not gone yet. But AI has created the easy button for programmers. And what that does is, like, there used to be this joy in solving very technical problems. And it would take you days, take you freaking weeks. It would take you maybe even months. It took me years to solve one of my side project problems that I had. And AI was one of the ones that really helped me get over the hump with some of the really technical bits. And without it, I would have never been able to complete that project or get it to the point where it's at anyways. It was never quite complete. But I can't imagine working without it now because it's so bloody useful in that sense. But the joy and the satisfaction that I used to derive of doing that on my own, spending God knows how many hours on Stack Overflow or something, reading some obscure, weird rabbit hole of like some dude in like Ethiopia who had the same weird problem that I did with some tiny little piece of code. There's only one sliver of this information somewhere on the internet, and you managed to find that sliver of information, implement it at your code base, and it works. There was a joy in that. It's gone. It's gone now. So, it is what it is. It's fun. I think there's other joys that'll come out of it. One of the joys that I do find with it is the ability to slice through information at speeds I never could before. fascinating. And my work at GVR, I've been able to like turbocharge the way I look at our data, at least internally. This is something I do want to be able to expose to membership and stuff in the future in the form of products and things like that. But it's a little bit of a tricky thing to implement, a long conversation there, but it's incredible the speed I can move now that it would take me, a week or something to code up a really interesting analysis. And now it's, I don't know, half an hour doing the actual code work, but now I get to spend more time on the thinking part of it of like, why does this work this way? Or why is, that's a really interesting thing where it opened up a lot more time for using my actual human brain, and some of the drudgery that used to come along with just coding up something really basic is now taken care of. Fascinating time though. I know that's like a super kind of went off topic there from your original question, but
No,
it's one of those ones that it's a wormhole, eh? Like you can really go far with that.
and we're all
Andrew,
collectively
maybe as
in it.
as a final question, using the all the time that you've saved with the AI, what is one headline that you think is the headline for the rest of 2026 real estate wise?
Yeah, I hate to say, I kind of feel like writing the last press release, I was like,
This is
this
it.
one kind of feels like what it's going to be. This is sort of the new normal. I didn't want to write it. I didn't want to admit it. I wanted to believe that there's kind of maybe something lurking around the corner that's going to really dramatically shift things. And it might, I'm very fond of saying anything can happen, like it really can. We've seen this plenty of times in life, pandemic, all kinds of stuff like that. Things happen that you just could not even possibly imagine. But just looking at the things that we can look at so far, and like I said, if I would, if people are interested in that topic of understanding why I think that's kind of the new normal in a much more fulsome way, go check out that presentation I put up on the economics blog. Just type in GVR economics in Google, you'll find it. And it really walks through a lot of my thinking, like we just talked about on this call here. A lot of that of like, why is it that this is sort of unlikely to change at any like future point in a really big way, absent some sort of big shift out of nowhere or something. It's like from a lot of these more macro, long-term megatrend perspectives, I kind of feel like this is kind of what we should be expecting the next few years, unless something big changes. It's just probably 26,000 sales per year-ish, I'm going to guess, is somewhere in and around what's probably appropriate. I could see a scenario where prices rise again. It'll depend on chewing through inventory, because even at the sales levels that we have, if you have a situation where fewer people are coming to market with their property, we will naturally chew down through inventory at a certain point, and we may achieve inventory levels that are sadly in some ways more normal for this market, which is sort of depleted, and that's not a good thing. I mean, we shouldn't really like hope for those things, or I don't anyways. I don't really like celebrate prices rising at a super rapid clip and people having to compete in multiple offer scenarios or whatever on property. I think a healthy housing market is one where people have time to make choices, and it's not so frantic, and you don't get the heavy hand of policy smashing things down when the market's moving a little too quick for the government's liking or whatever. I think it's fine to have a housing market where sales are maybe, it'd be nice to see them a little bit higher than where they're at. Maybe 28,000 or something like that would be a nice kind of healthy sales level going forward on a kind of new normal. Having inventory somewhere north of 12,000, below 15 something, that would be a kind of nice range. Keeps prices stable, doesn't keep them rising too fast, doesn't keep them deflating necessarily. There is this issue right now of a lot of unsold condo product, well, primarily condo, of brand new building or brand new completions. Something like, I don't know, 5,000 or 6,000 in Vancouver. I think it's like 7,500 or 8,000 across BC. And this is per CMHC's measure of these things. Some of that inventory you will find in the MLS, but it's very hard. I've been trying to triangulate that, like how much of it actually overlaps. And it's hard to figure out.
And it would probably be pretty small, I would think, because developers would post like 1 or 2 units, right?
That's right. Yeah, that's what I've noticed. You'll see like one listing, but there's actually maybe 100 units that are available, but there's one listing to like attract the person to the to the marketing material. So yeah, it's kind of one of those nebulous things that I've been. It's really hard to get at like a good read on in the data. But that said, I mean, there is this big amount of, or like a historically very large amount of unsold inventory there that is competing with the resale market in some ways, right? Like if you have a buyer who's on the fence about a condo from the 80s, and there's one that's in a similar market, similar neighborhood, and they're providing some kind of incentives. Maybe the price point's a little bit higher, but like they get, a much brand new unit and all these other things. They may go for that over the resale thing. And it was kind of an interesting thing. I don't have a great answer to like how much of this is happening, but I do think it is a possibility that shadow inventory, if you will, is siphoning away some sales from the resale market. Like when we look at our MLS sales, I think part of the reason the sales are a bit slower there is like some of it is chewing through that unsold inventory on developers book. But as we know, that inventory is not declining very quickly. So at the moment, it's not a huge amount of those sales. But like hypothetically, right? If you take Vancouver's unsold inventory on developers books or something, let's call it 5,000 or 6,000. Let's say just hypothetically, we chewed through that in a year and you added that to like what our forecast is for the year, you'd be like 30,000 sales for the year. Hypothetically, if that all went through the MLS, which it doesn't, but I'm just saying like that's the kind of level of action you would be seeing. But it's part of the reason we may not be seeing as much action as we normally do in the MLS is because we have a very high proportion of sort of unsold inventory out there in the quantum of all available things to sell. The MLS is just a snapshot of inventory, right? It's what's available in resale, but we can't see everything. We don't have for sale by owner largely in there, right? For sale by owner makes up something like 20-30% of the market, but it's usually in like you have to go further out of town usually before you start seeing a lot of. Yeah,
I guess.
Yeah, for the province. Yeah. So like but you go up to, like you're like north of, I don't know, like Prince George kind of area or something like that. That's where you start seeing a lot more of that sort of thing. But it is interesting because it does make up, we don't see it in the MLS. It's shadow sales, right? It's not there. But anyways, back to like our market here more locally, it's a pretty significant amount of investment products investment. I mean, it was built under somebody's investment. It was an investment, but it now it's turning into hopefully end users who are buying it, and it'll take a while to chew through that. It was like 5,000-6,000 units sitting around Vancouver, and like I did this kind of like interesting look at this where I compared that inventory over time, like the shadow inventory over time, to our MLS inventory. And like normally the shadow inventory is maybe like 5-10% of the MLS inventory or something, just as a ratio. Well, now it's like 30 or 35% or something like that. So that's a really big jump at this. You don't normally see that kind of thing. And so this is one of those dynamics that's unfolding right now that, it's a little hard to quantify how fast we're chewing through that unsold inventory and how much it's impacting the MLS side of things, but it's certainly a possibility, and it's an interesting thing to look at.
It's interesting. My biggest takeaway from this conversation is it's like the question that you had at your talk where the woman was like, when does the market go back to normal? I feel like that's conversations we have a lot with sellers and people that have watched this market for 20-30 years. Quite frankly, like kids that have been raised in Vancouver or young adults now that have had their parents say to them, look, like this is slow now, but the market will pick up and there'll be this FOMO that exists and it will be red hot again.
Like a regular cycle, right?
Like a regular cycle, right? And it almost, and then there's this tendency to feel like when you're in a downturn, this one's different, right? And we've talked about that on the show too. But this one legitimately, it does feel different, and that's kind of what you're saying. Like new normal is almost like, no, this is not a regular cycle. This is like fundamentally different, and will continue to be so.
I think under the hood, if I were to summarize like the one thing that I think is like the biggest factor that is fundamentally different than previous downturns, is that if you look historically in almost every single downturn that we've ever had in the whole history of Canada's real estate market, even population growth continued. We always had people coming in, and we still have people coming in, I should say. It's not that we don't have people coming in. Permanent residents are still coming in, but the rate that we are bringing these people in has changed, and that is likely to stay that way for a while. And that is one of those like underlying trends that over the past 5 years anyways, post COVID, we had very like turbocharged immigration into Canada. Like I said, we were running at like importing like 3 million something plus people into the country in 5 years, whereas that used to happen in 10. That's a massive difference. That's a doubling of the rate of population growth, like of how fast it's coming into the country, right? So it's like that really had, impact, or I think around 21, 22, where things really got heated. And of course, we didn't have inventory. And so to speak to that cycle nature of things, it's like I said, I wouldn't rule out a possibility where we get inventory declines. I haven't written the piece on this, but I did present on this at the Pac West conference. I had a chart that looked at how long it takes in previous cycles to chew through inventory before we start seeing like price increases again. And at the short end of the spectrum, historically, it was like a couple years. It was like 2 years. The longer end of the spectrum, it was like 10 years. But there's only a few examples of this in history in our data, because our data only goes back to like the 1990s sort of thing. It's not that long of a history. We don't have 200 years of cycles to look over here, right? But if that gives you a sense of orders of magnitude, like I think with a slowed down population growth and all these kinds of things, I think we're probably looking somewhere in the middle scenario there. Probably 5 years before we chew through inventory, absent, big supply increases, which certainly isn't going to be coming from the new development market anytime soon. Looking at what's going on over there, like that ain't happening. I mean, there's obviously going to be a lot of projects completing that were started a while ago, but from what I'm hearing, it's like it's crickets out there in terms of new projects being planned. Anyways, I don't know if that's shifting. Maybe you guys.
So you're saying, Andrew, 5 years from today, or 5 years from?
Probably like 5 years from. It's a kind of a washy thing. It's not like a precise thing. I can't give you like an exact date, but like let's just call it from like January this year or something. Probably like 5 years out. I think if dynamics stay similar, if population growth stays kind of muted, if sellers kind of ease up and go back to what might be considered normal levels of listing properties, which is a bit lower than what we've seen the past couple of years. Even if sales stay roughly where they're at, say 26,000 a year, that would likely equate to a lower level of overall standing inventory in about 5 years. And by lower level, I mean like getting towards those points that we consider sort of critically low, where you're only running at like 5,000-6,000 listings on the entire MLS. That's where you get the multiple offer scenarios and stuff like that again, right? But anything could happen in between that point in time. Right? There's so many things that could occur that could completely derail that. So like I used it as just like an example of showing like how long it can take to chew through inventory, like historically speaking.
Right.
But it's not exactly a prediction per se, because obviously, like we were just saying, this time is kind of different, right? So.
Well, Andrew, we've kept you for an hour, and GVR might increase our fees if we keep you for much longer here. So why don't we have this segment 5 lighthearted questions to end the show? You got time for that?
Yeah, of course. Yeah.
Okay. All right. One book that you've read recently that you'd recommend for our listeners.
And it can't be a manual. It can't be a manual, Andrew.
It sucks, because the first thing I went to, I was like, I was reading some pretty interesting technical stuff. But so one of the things I what's the title of it or something? I can't remember the title of it, to be honest. But so sorry for the author. I picked this book up off the internet somewhere. I was looking at like how to. I was trying to sort of like feel more like intentional and purposeful in my life or something like that. I don't know. Maybe it's a midlife thing or something like that. Like I was just feeling like sometimes the things that I do in my waking hours don't have as much value behind them as they used to or something. Like I felt like I had like some kind of deep driving purpose back in the day. These days, I don't know. I got a kid now. She's we still measure in the months. She's like 13 months or something, right? So it's a young kid, and it's kind of changed my perspective on a lot of things. Now I'm kind of questioning, I'm like, what am I here for? Like, obviously for my kid and my family and things like that, but like there's other things in people's lives that, you have some kind of burning desire to do. And I feel like some of those things have shifted for me. So I'm trying to live my life with a bit more intent. And this book is a little bit more, it's on the meditative side of things, of kind of asking yourself, like watching your thoughts and thinking about questioning why you think certain things, or why you desire a certain thing, or why you don't desire a certain thing. And it's been kind of like, I don't know, it's a bit of a slow go. I'm not fully done this book, but like, because I keep on diverting to some technical manual somewhere in the middle of it. My brain starts going like, oh, what about this weird like problem I was trying to solve the other day? So anyways, But yeah, that's kind of an interesting. I'll try to dig up the author because I feel bad for kind of.
But you've kind of answered the second question, which is what new belief, behavior, or habit has most improved your life, and it sounds like living with intention is is that.
Or trying to, anyways. And I would say also trying to be a bit more mindful of health and things. It's something as I'm getting older, I'm definitely, the days of being able to just not even care what you put in your body, like those are gone. And I have a kid to live for now, so there's other aspects that I think about now, being like more intentional about like maintaining my health and just trying to be, mentally there, but also physically there and stuff too. So kind of those two aspects are really starting to be something that I'm changing as a person towards. And maybe this happens to everybody around this age. I don't know. Maybe it's normal. Maybe it's not, but it's what I'm doing. So
hasn't happened to me. 3, what have you been binge watching lately, or a movie recommendation?
Binging on, so like definitely the YouTube side of things. A lot of it's like technical. I'm interested in talks around AI from people who I think are like reasonable thinkers about it. Like there's a lot of garbage out there right now on that topic. So like I'm not advising anybody to go to YouTube and type in like AI talks or something, because you are about to get bombarded with the most baffling, like it's totally absurd, like there's just the stuff that people will do for clicks these days is unbelievable. So I try to source that content through some of the social media people I follow, who I've followed for many years, that are sort of trusted sources of like filters of information, if you will. And I'll find talks and podcasts and things like that through them, of people talking about where the forefront of this is at like presently. And that's been pretty enlightening to listen to, and humbling in many ways. I was last year even, I felt very up to speed with AI. I felt very I felt like one of the people that was kind of in the lead of using it and understanding it and trying the tool, trying to work with it and developing new workflows and, really kind of embracing the new world. After listening to some of these podcasts, I just felt like a Luddite. I was like, my God, I've been doing so many things wrong. I've not been using these tools at all to their fullest efficiency. Wasn't even running any local models or anything to like help with things. And that's like one of these aspects I'm looking at now, of like trying to set up like local models that can do a bunch of tools, not so much at work. This is on a personal thing, although some of this may filter over to work at a certain point. But there are security and concerns and things like that of just sort of unleashing AI on in corporate infrastructure networks. You don't just do that, what I mean? So like, but on my personal machine, I can, I've spun up a couple Linux boxes and stuff where I'm like, there's no personal information on them or anything, and I'm just like, go to town, do whatever you want to do. Like, I don't care, if this thing burns down, it doesn't matter to me. So that's I've been listening to a bunch of that, like just trying to keep up to speed with things. And it's been very, very fascinating. And it is scary sometimes to see how fast things are moving. But then again, zooming out a bit, it's like the relevance of some of the stuff I'm listening to the average person's life is very thin. The average person is unlikely to need some of these very advanced tools that I'm kind of interested in. With that said, I think it would be crazy for the average person to think that AI isn't going to dramatically impact their life in every facet of it over the next, forever, from now on, forever. We've crossed the threshold. There's no going back from this. This is a fundamental change of things. And back to that question around like the fundamental changes in markets and stuff. I mean, maybe this has some impacts like that, but they're still kind of yet to be seen in terms of like real major job market impacts and things like that. We haven't in Canada anyways, haven't seen too much of that yet, but this is a new world where there's no going back. It's wild. It's a wild one. I think about my kid now, of like what her life will look like. I can't even imagine. But at the same time, there's like all this opportunity that will come out of it. Like the things that you can do now that you could never do before, or you could do, but you'd have to invest huge amounts of your life of domain knowledge, of developing like, some specific expertise in one thing to be able to do this one thing. You might spend 5-7 years. Now you could do like 40 of those things, just like have some bots do it for you while you sleep. It's unbelievable what's possible. So it is going to be a fascinating future. I'm sort of excited and worried to be a part of it, but it is what it is. So yeah,
It
long-winded
is what
answer to
it
your
is.
question of what I'm looking at. I'm trying to keep on the positive end of that spectrum though, and not go down any of those like wormholes of doom or AI stuff or whatever, because that stuff's terrible.
Favorite band or music that you're listening to right now?
Classical going back. So I bought a used grand piano when we moved to a new home about a year ago. I'd never had enough room for a grand piano. Finally bought a house that had the room for it. So I used to play piano as a kid, was not like some prodigy or something, but I always enjoyed it, and I played other instruments and stuff. So kind of going back to my piano roots, and I'm listening to a bunch of classical, really like, all the all the hits, Chopin, this kind of stuff, right? Like I don't really care. I don't really care who's playing it. There's obviously better players. There's different classical pianists who have very one of the things in going down this road I never really noticed much before, because it wasn't a huge part of my listening cycle, was listening to the nuances in the ways that different pianists play these same pieces. And it's incredible. Some people will play very mechanically, and you'll hear this very perfect representation of the sheet music. And some people will play with a lot more feel and emotion, and they take some liberal changes, let's say, in from the sheet music, some deviations, and it's gorgeous. I prefer the latter, that are a little bit more like, somebody's personal stamp on it, than the mechanical side of things. But it's fascinating to listen to both, and yeah, I mean, it also incredible. Like those composers wrote this stuff hundreds of years ago, and they didn't have AI, and they didn't have recording studios, and they just had to like play this stuff, over and over. They had to play the piece as they're composing it, right? Like unbelievable, right? Unbelievable. And
Yeah.
you listen to just how incredible some of these musical masterpieces are. It's, to me, mind blowing, just incredible.
It is true genius, right? Like that's
Pure genius. It's pure
Yeah.
genius. It's some of the most beautiful thing you've ever heard. And it's like, how did someone come up with this so long ago with so limited tools? And it's like, maybe because they didn't really have to do a lot else. You were like the musician for some lord or something, right? And you kind of just like hung around in the shop there with a piano. It's like that's your job. Like you just kind of. But if you were out farming or something, but yeah, it's that's what I'm listening to these days.
Right on.
Last but not least,
last
but not least, something you've purchased for under $1,500 that's had a positive impact on your life.
What did I
Can't be a manual.
Oh, we bought a backpack for the kid. So like,
nice.
this kid carrier or whatever. I got it used off like Facebook Marketplace or something, but it's sweet. You put this thing on, and your kids, she's only like 20 something pounds or whatever. So it's not like wearing like boulders on your back or something at this point anyways. It's great. Where we live right now, there's all these like hiking trails and stuff around, so we can take the dog and her, and it's just like wonderful. We can go for these lovely walks around this beautiful part of the world, and it's pretty cool. It's great to be able to just chuck her in the backpack and go. Whereas like before, strollers and things like that, they won't go like on a more like rugged trail or something. You're sort of limited to cityscapes or anything that has like it's interesting thinking about that too, also from an accessibility standpoint, which like most able people don't think about too often, but you start noticing like curbs and like,
Right.
things that like are difficult to kind of navigate through. And you kind of think, man, geez, if I was in a wheelchair, like a lot of this world would be very complicated to go through or something. And like a lot of things are inaccessible to people in those situations. It's like, that's really sad, because there's some really gorgeous places that people should be able to see in an accessible way. Even people with strollers and stuff. Like it would be nice if some of the trails anyways through like wooded areas or something were a little bit more amenable to that, but whatever, it's okay.
Fair enough. Well, Andrew, how can people find out more about what you're up to and follow along on the blog at Greater Vancouver Realtors?
That's the best place for sure for like any of the economic kind of analysis and content. Type in GVR economics in Google, you'll find our blog. pretty much should be the top listing thing. Otherwise, I'm gonna have to do some SEO on that sucker. But it should be top listed for you, and that's a good way to follow. We try to regularly update content there. That's where you find forecasts. That's where you'll find talks or things that I've done. That's where you'll find interesting analyses and things that I've written. So yeah, that's probably the best way. And if somebody really wants to email me, it's alis@gvrealtors.ca. So yeah, feel free to reach out if you got something to chat about.
Fantastic. Well, thanks again, as always, for your time, man.
Oh, you're more than welcome. Thanks for having me back.
So there you have it, folks. Our discussion with Chief Economist over at Greater Vancouver Realtors, Andrew List.
Really great having Andrew List on the program. Always a pleasure. Really funny, you really get to know him as a person, and he's very detail oriented, loves digging deep into the data. When you talk to him and he's like, I have like several thousands of models on the go. Like, I don't doubt that at all. I feel like he's
even the momentum model. I love that idea where he was like, where did I get this wrong? How do I factor in momentum into the model? I mean, one thing you would say about Andrew is he is his authentic self. That is for sure.
Oh, and what a get for Greater Vancouver Realtors, right? I mean, like,
no kidding.
Don't you want a guy just like him digging into the data at all times?
Well, and the other thing, and this is truly the way I felt after that conversation was it made me think about the last couple of years differently. Not only about market cycles, but also about that uncertainty narrative and these broader shifts when it comes to immigration and demographics layered on to policy and things like that. It's a really different understanding of the market than I think we've had on the show for a long time. So it was, I think this is a really useful conversation.
We tell ourselves stories in this industry that I think we kind of repeat, like almost ad nauseum, right? Like, and it's happened as long as I can remember, just conversation. It's always been generally the same conversations, and it's really refreshing to hear somebody just be like, I'm going to cut the noise and I'm going to try and reach conclusions on my own,
and not be influenced. He's kind of wildly uninfluenced by the narratives that everybody else kind of just accept, right? Which is great. So no, it's great having him on for sure. What else do we have for the day before we cut for the day, Adam? We got VancouverRealEstatePodcast.com. This is our website. Like I said at the outset, we have really enjoyed working with people who listen to the podcast and find value in the show over the years. And we would love to continue that. So if you or a friend or family member is interested in working with us to buy or sell real estate, or we can help in any way, please do get in touch. You can do so over at VancouverRealEstatePodcast.com, or you can try me directly, Adam, at 778-847-2854, or Matt at VancouverRealEstatePodcast.com.
Or you can try me at 778-866-4574 or Adam at VancouverRealEstatePodcast.com. You can also download the Sold Plan, our strategy for getting your home sold top dollar in the shortest amount of time. It's available on our site over at Sell With Us. And Matt, what about that bipartisan line?
Oh, the bipartisan line. That's info at VancouverRealEstatePodcast.com, Adam. That's an easy one. Well, have a good week, everyone. We'll be back next week with another episode.
Have a great week.